Okay, so I'm getting ready this morning and all of a sudden my phone just goes crazy. I'm getting an alert saying the jobs report just came out. I looked at it and I'm like, are you kidding me? This is so much better than expected. And then all of a sudden I get another blip and it's like, okay, mortgage bonds have just plummeted. What does that mean? If you're confused, that's what I talk about on a daily basis. So my name is Dan Frio. I'm a mortgage advisor licensed in all 50 states as well as Puerto Rico. So if you're out there trying to navigate the real estate market, I'd love to help you if on the financing part of that. So without further ado, let's get over to what I do on a daily basis. So if you're new to this channel, hang on. I'm going to educate you guys a lot more than you probably think. So the first thing we do on a daily basis is we look right here. These are the top 6 programs people use when they're buying their first house. Okay. What the gist is of this, these are not my rates. These are no individual bank's rates. This is a national average. So let me explain a little bit how these are calculated. Mortgage News Daily, on a daily basis, they do a fantastic job. They survey lenders all over the country and they ask them these 5 questions. Now I can almost assure you the first 3 questions are right what you're looking at. Okay. So let me explain. The 5 questions they ask them is, if you had a first-time home buyer looking to buy a primary home, the house they're going to live in, and it's a single-family home, that might be you guys. But there's more to the story. That this also, the person that's these rates are for, they have a 740 credit score and they're putting 20% down. So you're probably the first 3 parts of that, but you're probably not the second 2, meaning 740 credit score with 20% down. So if that's not you, don't fret. I'd love to help you figure out what interest rate you qualify for. I'll give you all my information at the end of the video. So that basically breaks down where these mortgage rates come from and what they're doing right now. But the gist of what we're going over today is right here. The U.S. payroll increased by 216,000 in December, much better than expected. So let me put the context behind this. The Federal Reserve has been raising rates and raising rates and raising rates. Why? Well, it's basically to cure inflation. So here's their thoughts behind it. And I feel like I'm a broken record when I say this. They're thinking if more and more people get laid off, they lose their jobs, well, then they don't have enough money to spend to buy stuff. Okay, if you don't have money to buy stuff, that means the stuff sits there. So the prices are going to have to start coming down because there's no demand for that product. The prices will start coming down and then people start buying it. So that's their thought. And if prices come down, that's AKA reducing inflation. Okay, so when this number first came out, the MBS market spiked over 60 points. Okay, so let's get over to this so I can explain it to you. Right through here, this is what we watch on a daily basis. So I monitored this right here. Why do I monitor this? Okay, because this right here, it's over here now today. This right here is a mortgage bond. We no longer follow the 10-year Treasury when we're trying to figure out mortgage rates. Why? Well, that's kind of old school. It used to hold up, but it doesn't hold up anymore. So what we follow on a daily basis is right here. If you want to know what's going on with mortgage rates, follow the mortgage bond, because the mortgage bond, the yield on this bond is the biggest component of your mortgage rate. Okay, so what happens is what we want to focus in on is the price right there. All you need to know is this: if the price goes up, mortgage rates come down or the yield comes down. There's an inverse, a yin-yang effect, okay? So today when I was thinking, or when I got my first alert that it was down 60, that means mortgage rates would have probably went up about 0.25% just this morning alone, okay? So what you could see right through here to kind of prove my point, here's where the prices were back in October when rates were 8. Then we had this huge rally right up through here, and this brought rates down to about 6.5%. So you can see in the last couple of days, it's dropped down a little bit. I'm attributing that to a end of the year, beginning of the year, not a lot of people working, a lot of people on Wall Street just not there. So that's basically what's going on. I usually start focusing week 2 or 3 in January to get kind of an equilibrium on what's going on with things right there. But let's take a little bit of a deeper dive. I'm going to show you my screens right now. Let's take a little bit deeper dive into the economic calendar that I personally use. Well, let's go over to the one I use for you guys because it's a little bit simpler. Here's what came in today. This is the economic news that is affecting mortgage rates today. Why? It's all Fed data dependent. So this is exactly what the Fed's looking at. How much people are earning each hour. So average hourly earnings. The last reading was 0.4. They expected it to drop a little bit, which the Federal Reserve wants. They want people to earn less. Remember I said they want the people out of their jobs or at least earning less. Okay. Well, it came in right on point. Okay, so that wasn't the shock and awe. The shock and awe was right here. There was 173 jobs added the last report. They thought it was going to be a little bit steady right through there at 170. It actually came in at 216,000. It completely shocked the market. Okay, they're saying, okay, if the jobs market is robust as ever, well, the Federal Reserve is not going to pivot and start reducing rates. But then once they started looking into this, they saw most of the job creations was at the government level. So then they're looking at this and saying, okay, well, maybe it's not as bad as we expect. So this morning right through here, this number was minus 60. Now we're only minus 11. So that means instead of interest rates going up about a quarter, it might go up about 0.02 or 0.03, a huge difference when it comes to mortgage rates. Okay, so that's that report. If you go over to Wall Street, let's see what it's doing right now. You have a lot of things. Well, this was all in the red a little bit ago, and now it's all in the green. Again, when you take a deep dive into a lot of these numbers, it's not as bad as expected. So that's the learning process right here is don't react on the initial number. You got to dig into the details to figure out where exactly the number is and what caused it, the whys behind it. And that's what I try to explain on my channel every day. Why is what's going on in real estate actually taking effect? And I try to educate you guys every day on that. So that is it for today, guys. It's a short little economic report. It's a Friday. I'm going to let you guys get out of class a little bit early today. But if you're out there and you're like, Dan, how do I get in touch with you guys to help me? Well, there's three simple ways. One is a little bit different than almost every other bank out there. What we do is we have an apply now button, and everybody has that. But when you click that button, what happens is you don't go to an application. We actually ask you a few questions. When are you looking to buy? Where are you looking to buy? What's your time frame and so forth. Based on the answers to those questions, I'm going to assign you to a specialist on our team that actually is right in the wheelhouse of what you're looking for. Okay, but if you're out there and you're like, hey, Dan, can I call in? Can I email you? Yes, you can. So when you're at the rateupdate.com, don't forget all these tools and blogs and all these things up here at the top that we have for you. Mortgage calculators, resources, goes through the different kind of loans, student loan relief, and a whole bunch of other things. But if you scroll down to the bottom right through here, you're going to bypass some interesting articles, mortgage calculators, and when you get to the bottom, you're going to find my information right here. There's our 800 number right there, 844-775-5626. And if you'd like to reach me personally, you can get me at dan@therateupdate.com. So thanks so much, guys, for watching this week. If you're not a subscriber yet and you like my channel, please don't forget to subscribe down below. And last and not least, have a fantastic weekend, and I'll see you back here on Monday. God bless. Have a good time. Bye-bye.